Ladies and gentlemen, my name is Greg Mikulowski from ForexLive.com. Today's date is January 12th. I'm going to give you a little bit of a run through of the sterling versus US dollar. Hopefully you'll learn from it and also get some trading ideas from it for your trading here today. So let's dig into it. I'm going to start off by taking a look at the daily chart here. And what I want to focus on here on the daily chart is more of what happened over the last few days of trading. In the move to the downside yesterday, this was pre-Trump press conference. We saw the price move below an area here that is of significance. Why is this of significance? Well, if you discount the flash crash that occurred in October and instead focus on the other lows through here, you can see that in yesterday's trading, we went below all those lows. We made new post-flash crash low in trading yesterday. That should have sent the price moving to the downside, getting below this yellow area right here. And it did for a little bit, about 50 or maybe 40 to 50 pips, but then quickly rebounded. And as you can see off of this chart, we closed higher on the day, and then in trading today, we moved even higher still. Now, where did we peak at in our trading here today? And if I were to take a look at the move down from our December high to our low that we saw in trading yesterday, the 38.2% retracement comes in at 123.18. Our hard price today came in at 123.15.6. So within 2.5 or 3 pips of that 38.2% retracement. Traders may be leaning against that retracement level. In addition to that, if you were to look at this area through here, I'll put it in yellow, it defines bearish below and bullish above. Bearish below, bullish above, bullish above, move below, more bearish. Kind of gets a little squirrely here at the end of the year, early January. You might expect that at the year end. And then today we move into that yellow area again today, and we've found some resistance against that level. So off of the daily chart, what we're seeing is a failure down here, a movement into resistance up here. And there's a question whether we're going to get above the 18 level and continue to move higher, get above the trend line and move toward the 124-ish type level, or was that enough? Are we going to move back down here? Is the dollar going to continue its strength, or the sterling continue its weakness? That's the daily chart. Now, when you look to trade, it doesn't really tell you anything about the immediate right now. It tells you that, if you're bearish, you want to sell against that 38.2, but we're already down here around the 122.74 level. So let's drill down into the hourly chart and see what that is telling us. And if we take a look at the hourly chart here in the sterling versus US dollar, what do we notice here? And I've outlined some yellow areas here of importance, and this yellow areas define swing levels where we had a swing high right here, and then potentially a swing low right here, a swing high right here, a swing low right here, a swing low right here that breaks through, and a swing high up into that area. So these yellow areas are levels where the market remembers, okay? I call them remembered lines or remembered areas. And I find that the market remembers those levels and has decisions around those levels. The same can be true on our move to the upside yesterday. Market moved up to this swing area defined by a swing high right here, swing low right here, a swing low right here, break through that, and a resistance through here, a swing low here, swing low here, a little break below here, and a swing high right here, swing high right here. That's where the market stalled at in trading yesterday and moved to the downside. Now, where do we sit in this currency pair? Well, we went up, remember, to that 38.2% retracement at the 18 level, found sellers against that level, also near this swing area as well. And the next time the market came up to that yellow area, we found the sellers ahead of the 38.2 and perhaps using this swing area through here to lean against as resistance. And so we know that around the 123 level, the 2306. There's other resistance, and the market took advantage of that. In addition to that, now we went below this swing area and have actually traded above and below it. But what do we notice in this green line? This green line represents our 200-hour moving average. And for the most part, the market's been able to hold support against that 200-hour moving average. So we've got a more compressed look at the market. The compressed look has support at 122.53, has resistance at 123 even, and we're trading in between at around the 84 or 85 level currently at the moment. So, you know, a little bit more bullish because we're above this yellow area. But certainly there's some resistance on the top side that we need to get to and through on the top side in order to push this market higher. Now, can we go even further? Can we look at something like the 5-minute chart and make a judgment as far as what that is saying to us? Well, first thing I want to show on this chart is I've put the overlay of the 200-bar moving average in this chart. And I think this is important because it shows us as traders what happened around that support area in the minutia, in the actual buying and selling that goes on in the market. And you can see that the market, when it went a little bit below that 200-hour moving average in this hourly bar, or in that hourly bar that we saw on the prior chart, it was like a little bit below it and back above it, a little bit below it and back above it, a little bit back. You know, maybe there was a 1 5-minute bar that closed below it right here, but the next bar we moved above it, and then we started seeing support against that level. Buyers are showing up here. Buyers are showing up here. And the next time we came down to that level, what did we do? We found support buyers ahead of that 200-hour moving average. In addition to that, if you put a Fibonacci retracement from our low to our high, or 38.2% retracement, comes in around the 59 level. And so from a trading perspective, we could see some buyers against this 200-hour moving average. That's what I see in this chart. So it gives you more confidence that perhaps the move is still to the upside for this currency pair. We get a further confirmation on the 5-minute chart in the last 5-10 minutes on the break back above this blue line. This blue line represents our 100-bar moving average on the 5-minute chart. And if you look back over time, we went below it here, came up to it here, moved above it here, and then stayed above it until this last little break to the downside that took us to the 200-hour moving average. And we just had this little battle in between the 100 and the 200, and we just moved above that level. So from that progression, from our daily chart, which shows us the big picture, to our hourly chart, which kind of digs deeper inside and finds a support against the 200-hour moving average, to our 5-minute chart, where we see the price action and a closer moving average, some clues right through here, we get a greater vision of what we need to do as a trader, what levels are important as a trader, and drills us down into potential trade opportunities. From that point, from this more bullish, maybe buying against the 200, maybe buying above the 100, we also get to look at targets, like where we need to get above. We need to get above this 123.03 level. We need to get above the 123.15, really 18 level, which is our 38.2% retracement level. We need to stay above this yellow area through here and get above this this yellow area right here on the hourly chart. We have an idea of where our risk is on the downside, where our targets are on the upside, and that, my friends, is what you should do as a trader in analyzing the market from a technical perspective. I hope you liked this video. If you liked it, give it a thumbs up. If you didn't like it, give it a thumbs down. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.